certainly a disappointing year, but also a very tough environment, operating environment for everybody, including us. So certainly hope that we're at the bottom. I think that in terms of we're in a cyclical industry, and when things like these impacts do happen, it does reset expectations, and then you do come off the bottom with opportunities that emerge. So we're feeling confident about the opportunities that'll be ahead of us, and we've put in place some very strong liquidity. We raised additional equity, and we raised additional debt facilities as well. So we have over $5 billion of liquidity, and we're in a position that we can invest strongly in our pipeline, which is very extensive, and also look at other opportunities that are likely to emerge.
Now, I want to touch on that pipeline in a second, but in terms of, say, for example, the backlog that you're seeing now in terms of construction, because there are still the potential of further outbreaks and then further pressures that could apply onto being able to kickstart some of these projects, do you foresee any kind of issue there? Or is it merely just the case of if you have to go again and shore up some further the cash that you'll do that?
Yeah, look, we took an approach that, very early on, that we needed to respond very quickly to focus on the priorities, firstly, the health and safety of our people and our customers, and then secondly, our liquidity and our balance sheet, and make sure that was very strong so that it could withstand a potentially extended downturn and then be in a relative position of strength. So we've done that. In the context of projects, there are varying impacts, obviously, across our group from the delays and the various forms of shutdown that have occurred. By and large, construction has seen to be a sector by governments around the world that's critical to the ongoing performance of their economies. And so there have been a lot of collaborative efforts between industry and government to ensure projects can continue, albeit at reduced productivity levels and with clear social distancing obligations. And we've applied them across our business. We expect first half of FY21 will continue to be impacted by COVID, but obviously it's an uncertain environment, and we can't be too predictive or too prescriptive around how things play out from there.
Are you confident, because you've seen a big jump when it does come to your pipeline, that 48%, I should say, rather, jump to over $100 billion when it does come to that, but are you confident that all those projects will still go ahead despite the uncertainty of COVID?
We are, yes. In fact, in the last few months, we have disclosed that we've agreed 3 new investment partnerships across $7 billion of development value across our book, which shows that the projects are very much still the types of projects that investors are looking to invest in. Our fundamental strategy is around mixed-use urbanisation precincts in gateway cities. Cities will continue to be a cornerstone of human activity, and gateway cities do tend to be much more resilient. And that is our key competitive advantage, delivering great place outcomes in those types of projects.